Hey, how's it going? I'm Seb, and I noticed that a lot of people struggle with financial literacy, and I just wanted to make this video to show you how easy it is to actually start investing. And it's crazy, except right now I'm down like crazy on the market, but doesn't matter because for me it's the long term thinking. Damn, okay. Well, I just wanted to show a couple of things that I really like about investing, and I kind of wanted to just show people what they should invest in and what things are actually very great. And so this one is a dividend yield, and it's actually amazing because it it on here I gotta see where it is. Oh yeah, the dividend yield. It's 3.49%, and it's actually amazing because if I move this over and I show you over 5 years how much it increases, it's not as much as the S&P 500. Well, what's so good about it is that it yields dividend. And what I like to do is let the dividends automatically reinvest, and it'll keep buying more and more shares of it without you having to do anything. So you own one share, just keeps buying more of those shares, which is crazy because if you think about it over a long period of time, it snowballs. And the earlier you can start, the better it is. And another great one is VOO. This one's amazing. It has such a low expense ratio, allowing you to really not have to pay too much in expenses. Because say you own this and it had a 1% expense ratio, every year they would take 1% of that as a fee. And it's so nice how low the expense ratio is, and anyone can get started in this kind of investing. It yields a lower dividend, but if you see at the overall growth, it skyrockets. And here, if I go in the long term chart, should be able to. Oh, wait, no, this is for day trading. Oh, yeah, I could show maximum. Now that's crazy. But the whole point is not seeing the graph, but really making the long term gains every year. That's the most important thing. Is that when you get started investing, it's important to start as early as possible. And this is just to show you how good it is actually. And another, there's a lot of good ones that I have, but I just started out, so I'm not like insanely rich. But it's nice to show how good investing is. And if I go to overview here, it's the same thing. And this one yields a much lower dividend, but it's specifically growth stock. So they own mostly growth stocks, yeah, here on the top 10 holdings. And what's really good is I even have some individual stocks. I don't recommend that too much because it's more volatile. Damn, today I lost 10% on Apple. It's crazy. Except I'm never selling it. I'm holding it on for like a long time. My gain is over 38% in less than 2 years, which is amazing. But also, there's these Fidelity portfolios. These ones are amazing. If I go to overview, it shows you the hypothetical growth, but also has zero expense ratio. So here, if I show you the maximum, it goes up pretty good for $10,000 in growth. But what's amazing is how it has no expense ratio. And that is actually amazing. It yields a, I don't think it yields a dividend, it's just growth. But this one is actually amazing. And I put it in recurring amounts. So every month I buy like $100 worth of each of these. So I let the my dollar cost average, which it actually, if you do a statistical calculation, your expected value increases. Even though you might not make as much money, your risk is significantly lower. And that actually increases your expected value. And it's the same for these ones. On Fidelity, the rate is so good at that they give you. And there's one that yields dividends that I gotta find. This one has a tiny expense ratio, but much more dividends. It doesn't really show the exact percentage, but the the growth is amazing on these Fidelity things. And what's nice is that they constantly rotate out different things, so it's almost like an actively managed portfolio. And the thing is that actively managed portfolios can actually yield you the highest amount. And sometimes it is actually good to have a financial advisor, even if you want to do it by yourself, because if somebody actively manages it for you, they may be able to decrease your risk significantly, making you much more money in the long term.